Welcome back to Finance Daily. My name is Austin, and this is a no BS approach to finance news. Today, we're going to look at what the Fed said in their minutes report. Then, we're going to talk about data about Americans having severe saving troubles. Then, we'll take a look at an interesting story about stolen crypto. And at the end, we will look at Bitcoin and their crazy price predictions by some financial icon. And, of course, what it all means for you. Today, we're talking about a story that has been making several headlines, which is the new release of the Federal Reserve's minutes, detailing a debate in the wake of the SVB and Signature Bank failures. The Fed minutes is basically a behind-the-scenes account of the Federal Reserve meeting, and the meeting's sole purpose is to discuss the U.S. financial state and whether or not we should be raising our interest rates. So what happened? Well, it looks like the hot topic was discussing the two bank failures, Silicon Valley Bank and Signature Bank. These two banks are considered to be significant players in the banking industry, and their failures are raising concerns about the stability of the whole banking sector. And that's essentially because when banks fail, it can quickly spread to other banks. That's why it's called bank contagion. The minutes reveal that there was a fairly heated debate among Fed officials about potential risks of these failures, with some officials expressing concern that the impact could be severe enough to cause a recession. The officials also discussed the need to increase regulations or supervisions among banks to prevent similar failures from happening in the future. I mean, not only just causing a recession, but if you leave an issue like this alone, it can be even worse. These banks were essentially victims of a bank run, which are caused by the psychology of people. Not to be that guy, but the Great Depression was also caused by bank runs. The problem is, the banks don't even have to do anything wrong. If everyone just has the same mindset, well then down goes the bank, and there's really nothing that we can do about it. This news comes amid concerns about the overall health of the whole banking industry, and this is the interesting part. The reports indicate that the Fed's staff, yes, their staff members, expect a banking crisis to cause a recession later this year. The staff report cites that ongoing risks caused by COVID-19 pandemic, rising interest rates, and increased inflation are contributing factors to the potential crisis. Let me talk about my opinion real quick. The banking crisis and these failures has really stirred up things in the banks. There are lots of banks kind of in a similar problem as the banks that failed, with the balance sheet issues looking less than ideal. But here's the problem for the whole economy. See, when these banks have a crisis, or in this case the whole banking sector has a crisis, then they will limit their new lending to people, businesses, or even households. They will have to be more picky because at the end of the day, they're going to be more afraid to be screwed over. They don't want people not paying on their loans, so they're going to be more picky on who can get those loans. Essentially, this means that there will be less money out circulating, and there will be less money for the middle class, and the middle class does make up a large portion of the money spent in America. And in return, this means that the economy will produce less, and it could run us into a recession. So what does this mean for investors and the general public? Well, the Fed's actions and decisions have a significant impact on the economy and financial markets. The recent minutes and staff report suggest that there are risks and uncertainties ahead, which could lead to implications from everything from investments to the overall health of the economy. I do want to note that this situation is definitely concerning by all means. It's not necessarily cause for panic though. The Fed is closely monitoring the situation and taking steps to address the potential risk, such as increasing oversights on banks and implementing new regulations to prevent more future failures at banks. But being honest, there's really not much more we can do besides hold out and wait. My one recommendation is if you have over $250,000 in one bank, just consider moving it to a larger bank, and that would be my only thing that I would potentially recommend. Other than that, spend less and I guess try to go make more money. So our next story comes from Unusual Whales in the CNBC about saving money and Americans having lots of trouble. According to a recent survey by CNBC, over half of 4,336 respondents who were over the ages of 18 living in the United States had no emergency fund. Yes, no emergency fund. In particular, a quarter of them even had less than $5,000. So this is a big deal because people this isn't even enough to make up an emergency fund sometimes. An emergency fund is a designated fund for probably your worst case scenario. Let's say you get laid off, your car breaks down, or you just need money to survive. This is what the fund is meant for. So having 3 to 6 months of living expenses in an account that you don't touch is going to be the key. I promise you that you're going to be feeling happier and less stressed every day if you have just enough money set aside to get by in case the worst happens. What's more alarming is that half of the participants live paycheck to paycheck, including people earning over 6-figure salaries. 40% of respondents had less than $10,000 in savings, and 70% of respondents reported being financially stressed about their personal finances. When asked about their biggest financial stressors, 59% of people attributed it to inflation, and 30% said that they would need to make over $100,000 annually to feel financially comfortable. The survey also revealed that 44% of respondents had credit card debt, 37% had loan debt, 33% had mortgage debt, 22 had medical expenses, and 20 had personal loans. So the government has been spending money slightly recklessly and caused inflation. We know that. and people are hurting at the pump, people are hurting at the grocery store, they're hurting in the housing department. If this is you, please pay attention. We are coming up on a recession. It's coming and you should prepare. I want you to build a 3 to 6 month emergency fund. Then I want you to look at your expenses. You need to do what businesses do and find ways to save more money. I'm not talking about little things, I'm talking about on a big scale. It's time to stop going out, stop shopping with friends, and stop shopping to feel better. It's costing you just too much money. Maybe you live in an apartment that's probably too expensive for your income. That's okay, but harder times are coming, so reducing your big spending on an apartment, or maybe it's a car in your case, will help you so much. You need to make more money. So maybe it's cutting expenses, that way you have more money for yourself. You can save it for you, save it for your kids, etc. The amount of relief of just knowing that you have that nest egg when things go bad, or just have a little extra money to invest in your future, will do you so much more than that new purse that you're eyeballing. On a different note, recent reports indicate that retirement savings of Gen Z averaged $33,000, which is significantly lower than the baby boomers. Furthermore, the study found that 70% of parents were helping out their adult children over the age of 18 by sacrificing their own savings. So if you're curious about retirement, please consider a Roth IRA. Extra money invested can grow tax-free and will help you so much when it's time to retire. Or maybe the best bet is just to start saving for an emergency fund. Either way, the economy is getting worse. So be prepared so it doesn't surprise you. Next, we're moving on to more of an interesting story than a value story, but today's story is about a former college student named James Zhong, who stole $600,000 after discovering a software bug while using Silk Road, an online marketplace for criminal activity, aka Facebook Marketplace for the bad people. Mr. Zhong moved his stolen Bitcoin from one account to another to cover his tracks, and the value of his wallet had risen to $3.4 billion by late 2021. However, federal agents eventually found the digital keys to his crypto fortune hidden in a basement floor safe and a popcorn tin in the bathroom. He pleaded guilty to wire fraud and is scheduled to be sentenced in New York court, where prosecutors are seeking a prison sentence of less than 2 years. This case is one of the highest profile examples of how the feds have used the blockchain in order to backtrack logs to find their criminal. You gotta think back a little bit. One of the biggest draws of cryptocurrency was thinking that you were hiding your transactions and keeping everything a secret. And I know that's especially good for criminals, but people like us thought that too. Private and government investigators can now identify wallet addresses associated with terrorism, drug trafficking, money laundering, and cyber criminals. Law enforcement agencies are now working with crypto exchanges along with blockchain analytics companies. In the past 2 years, the US has seized more than $10 billion worth of digital cryptocurrency through successful prosecutions. What's interesting is the blockchain will preserve evidence perfectly, and every transaction is stored forever in an online ledger and is open for anyone to see. The blockchain analytics company, Chainalysis, based in New York, has mapped more than 1 billion wallet addresses, separating out legitimate and questionable holdings and identifying the exchanges where the cryptocurrency is then converted to cash. This feature of the blockchain will make it difficult for criminals to convert their crypto to cash. Then the government officials will publish their wallet addresses, and no good crypto exchange will actually want to do business with them, fearing the legal consequences that come within the US or whatever first world country they're part of. Yes, I know this is good news and the bad guys are being caught, but we need to look at this past the implications for us regular people. Well, now we can kind of see that the crypto isn't that great escape that we once thought. I mean, we know better to think that crypto was this impenetrable system that the government can't get past. So now not only do the crypto exchanges have to report to the IRS, but now these agents can also see into your wallet. And now the ever-powerful government wins once again. That brings us to the last story, and the last story is Bitcoin. Bitcoin has been on an absolute tear lately. From last November, it has nearly doubled and has broken through that $30,000 barrier once again. And just looking back at history, the last time Bitcoin had a run like this, it peaked at $68,000. So let's take a look at what's happening and what some influential people are saying about the world's #1 cryptocurrency. First, I kind of want to know what you guys think. In my opinion, there's either one of two situations playing out. So the worst case scenario is people are playing the dead cat bounce, and dead cat bounce means the stock basically bounces and starts to go back out and fakes everyone out before crashing again. It's a little different than a stock dead cat bounce because people would be exiting their short positions, but it's not as easy to short cryptocurrency and also Bitcoin. But still, people could be playing that dead cat bounce mentality, and this could be a short bounce and then it could go right back down to the ground. So basically, this is just a fake out and then back down with Bitcoin. Second option is people think Bitcoin is once again a good value and an investment that we are sending it back up to the moon, aka buying more than we're selling. And we're also starting to see the same level of volume come back into the market that we saw when it first ballooned up to $68,000. And this is kind of promising for Bitcoin. See, people are seeing crypto as an escape from centralized currencies because, well, they're scared of the recent events that have been happening, and honestly, I don't really blame them. But I want to look at what two very influential people have to say about two very different opinions on this topic. First is Warren Buffett. Warren is a lifelong investor that has been making billions of dollars in the market by buying undervalued companies and selling them for huge profits. And if you search for the greatest investors of all time, Warren Buffett is at the top. But some people think because of his old age, he is out of touch with technology, but either way, he has tremendous experience and there's good reason to take his opinion very seriously. He said something like Bitcoin, it is a gambling token and it doesn't have any intrinsic value. But that doesn't stop people from wanting to play the roulette wheel. He goes on, people love the idea of getting rich quick, and I don't blame them. It's human, and once you unleash that, you can't put it back in the bottle. So I interpret this as Warren saying because the price is once going up again, people are getting FOMO. They're getting back into it because the second run has to have the same results as the first one, and it could be an easy way to get rich. So do you agree with Warren? You let me know. Well, if you don't, let's take a look at the Cathie Woods take. She gave us a crazy target, and it's almost comical at this point. Not saying it's wrong, but it's still comical either way. If you don't know who Cathie Woods is, she is an American investor and the founder of ARK Invest firm. They have assets under management of around $14 billion, which is a pretty decent sized fund. Cathie Woods first got a lot of criticism for her first price target of $1 million for Bitcoin by 2023. But she now recently revised that to, guess what, $1.4 million per coin by 2030. That's an absolute increase from the price of $30,000 today. In fact, that would be 4,833% increase. So if this played out, this would be one of the best investments of all time. This super high price target suggests that some countries may start accepting crypto as legal tender, but right now only Salvador and Central African Republic do. This, I think, is a very unlikely scenario since Bitcoin is hard to control and most countries want a cryptocurrency that they can also control, but even weaponize. ARK Invest suggests that Bitcoin can make up 50% of the digital gold market, and saying that Bitcoin could replace banks' physical gold reserves. Honestly, I don't see this happening at all. If Bitcoin was worth the $1.5 million, then all of the gold's existence, Bitcoin would be worth 2.5 times more than all of the gold combined. So please let me know what you think. Where will Bitcoin be in 2030? Will it be up, down? Will Bitcoin even still exist? That's it for today's finance news. Subscribe for tomorrow, and I will see you guys on the next one.